Hello and welcome to this week's episode for Conservative ETF Investor. I am your host, Ken Cogliano, Senior Market Analyst, and we are going to go through this week's presentation right now. Today's update is going to be for January 18th, 2025. We do have a red for the stock market strength color signal. All right, here is all the information that we are going to go through for today's intra-month video. Instead of going through each one of these bullet points, if you want to pause the video, go ahead. I'm going to try to make these videos as short and brief as possible. As of January 18th, 2025, there is a 97.9% probability that the Fed, Jerome Powell, is going to hold interest rates where they are on the meeting that's going to be on January 29th. Last week, the S&P 500, and by the way, we use the indexes, the ETFs for the indexes, we use the ETFs only, so SPY for representing the S&P 500. For those who don't know, gained 2.94%. The Cubes NASDAQ 100 gained 2.87%. IWM, small caps, 3.98%. Now, this is interesting. Small caps outperformed last week, but generally speaking, small caps is the weakest of all three of these indexes. Okay, so I am going to share with you my SPY portfolio. I do run 4 portfolios, but I only share with you, the YouTube audience, the SPY portfolio. Last week, we sent out one trade alert to our subscribers. That went out on Friday, January 17th. Well, heck, that was just yesterday. And we did that at 7:59 a.m. Pacific Standard Time. And we sent that out, and here's the notification. This market is moving higher, and we are long, but we don't have enough money at work. So we're going to buy another 50 shares at the market of SPY. So we ended up doing that on Friday. All right, now this is a candlestick 10-day chart for the S&P 500. So here is on Friday, and here is that buy alert that was sent out to my subscribers. And we look through what's happening here on the past trades that we've made here. So it looks like the last trade that we made prior to this one here on the SPY portfolio was on the 10th, in which we bought to close and in the money covered call. So we were profitable. We made $600, $700 on that particular transaction. And then the market started to go long, and we started going long, but we pyramided into the position. We didn't go all or none. We pyramided in, because when you start going into the position, you never know if this market's going to start going the other way on you. And you want to be careful of how much money you have risk. One of the things we do as traders is we want to manage risk. And that's what pyramiding into and out of positions is all about. It's risk management. These are all the trades that we've made for calendar year 2025. If you want to go back and see all my trades going back for the last 3 years, you can head over to this link. It will be down in the description down below. Also, if you want to sign up for real-time trade alerts, you can do so at that same link. Now, here are the trades that we've made 2025. The yellow represents open positions. We don't have sell dates because we have not sold the positions yet. We are holding those positions. I was just talking to you about pyramiding into positions. Well, guess what? 50 shares, 50 shares. That was that in the money covered call where we made just under $700. And now the market's still moving higher. Let's put more money to work. Let's take some money off the sidelines, and let's put some money to work while the market is advancing. All right, so down here, you can see in our pie chart, we can see that we have 68% of our portfolio. Now, we're starting the year off of 2025 in the SPY portfolio with a starting capital of $130,000, and then we're going to build it out from there. All right, and right now our portfolio is up 1.09% for the year to date. We do a comparison against the S&P buy and hold investor. They are up 1.96%. They had a great week last week. Ken, why didn't you get 1.96% last week like the S&P 500? Answer, because there was too much risk going into that. We'll get into the charts. I'll show you exactly where SPY was and why I was hesitant about how much risk exposure I wanted to put into the portfolio at that juncture. And so the answer is risk. And that's why we did not equal the returns of the S&P 500 last week. All right, now here is an equity curve against our model portfolio in blue against the buy and hold investor in pink. Now, we were surpassing them, but after last week's action, and because the buy and hold investor is 100% fully invested at all times, and the market moved up, they moved up 100%, or a 1.0 beta, you could say, with the S&P 500. They just went straight up with that. We didn't go up as strong because we are not fully invested. You saw how much we have in cash compared to how much we have in equities at this time. Now, by the way, here is our 2024 returns. In 2024, the model portfolio returned 37.29%. The buy and hold investor returned 23.30%. So there is a strategy with this. It is a long-term strategy, but if you stick with it, it does pay off. We smoked the S&P 500 last year by 14 percentage points with this same strategy, okay? Now, the year is just beginning. We're just in January. We're halfway through January. Look at all this white space, a completely blank slate for the rest of 2025. We don't know exactly how the market is going to move in 2025. All we can do is position ourselves to, once the information is revealed to us, position ourselves in a way that we feel that we will be profitable with those positions. Because we can play the market going long and going short, unlike the buy and hold investor, which is one-way directional. All right, this here is a weekly 1-year duration candlestick chart for the S&P 500. And this is going to be last week's action. The last candle on the chart on the right-hand side is last week's action. You'll notice that this color of this candle is a green candle with a hollow inside, meaning that it opened the market here for the week and it closed here for the week. The body, hold on one second, let me clean that up. The body of this candle completely overshadows the body of the previous candle. That is extremely bullish. So that's one thing that's very bullish. Another thing, we also monitor slow stochastics and the MACD, moving average convergence divergence at default settings and at default settings. Now, down here on the slow sto, you'll notice here in the thumbnail that we have clearly bottomed. We have not broken out yet, but we are getting to break above the signal line and head north. Slow stochastic, MACD is definitely stopped descending at that same trajectory. It's softening a little bit. Here in the histogram, actually you can see it really well here. You notice how this bar is a little bit taller than that bar right there, telling you there's a little bit of more energy going more north like that. So if this market continues for a few more days, it's going to pull with it the slow stochastics and the MACD. These are extra energies to help push and elevate that market and make it go higher. So right now we're starting to see that. We have skin in the game, not 100%, but we're starting to see these telltale signs. Now we're going to switch over and look at a daily candlestick 6-month duration chart for the S&P 500. I guess we have a lot of information here. I got a lot of lines, a lot of information. Let's just focus on a few things. Now, down here we do have cycle brackets. Let's just start it from here. That low is that low right there. That low is that low right there. This low looks like it's right there. So that means that this cycle would now be complete. What does that cycle tell you? Well, if we open the cycle here and we close the cycle here, that's clearly a breakdown or a negative cycle, okay? So we definitely have that going against us. And the way that this cycle broke down right after, at the beginning of the entry phase of that cycle, that's also bearish. So we have two bearish events going on. In addition to that, even if you don't look at the cycle brackets and you just look at highs and lows, lower high, lower high, lower high. But now, as of Friday's action, this trend line that I had drawn in, shared with you last week, is now broken. That means that we are now breaking above resistance lines. This is the reason why I did not want to go all in. This line had not been breached for 1, 2, 3 times before this. This was the 4th attempt to try to break above this line, and we have now broken above it. So the market has producing enough energies now to break above resistance lines. But this line here, this line right there, is the reason why I did not want to go all in. There was a reasonable expectation, just like before. We had bounced off it. Instead of going up, we could have just bounced off it and went down. At that point in time, I didn't want to put all my eggs in one basket. I didn't want to be fully invested. Hence the reason why we didn't equal the returns. The answer was risk management. Now that we are above this line, what is going to happen? Now, the answer is we don't know exactly what is going to happen. All we can do is react to what we see happening. What are the options of things to happen? Okay. Just like any market, you can go up, you can go down, and you can go sideways. So let's explore all options. If indeed we continue to go up, well, then the market is still advancing and we want to put more money to work because we don't want to have so much cash on the sidelines if we're going to continue to advance. If the market goes sideways, well, you're not going to make money in a sideways market because right now the market's trading at 597.58. 597.58. If we stay at that and you buy it and you sell it at 597.58, you've made no money, you've lost no money, you've just moved sideways. The only way you can make money in a sideways moving market is if we sell option premium. That is another tool in our toolbox of tools that we can use to generate income from this portfolio in sideways moving markets. Am I ready to do that? No, because I think there's more up energy than there is sideways to down energy. I'm bullish at this point in time for the short term. Unless the market tells me otherwise, right now I'm bullish. So, but I'm just trying to explain to you, the audience, options that we could take on how we can generate income in sideways moving markets. Now, let's go to the last extreme. This market is just going to reject what it just did. As a matter of fact, if you look at that candle, that's a spinning top candle. That's a candle that represents indecision. The market is a little bit undecided. But the fact that it broke out above this resistance line in and of itself, that's a bullish sign. The more time you spend above that resistance line, which is now support, because we're on the opposite side. So let's call it a support line. As long as now we don't come below that support line, that's going to be a bullish activity, the more time that we spend above it. If we break below it immediately or sometime in the future, well, obviously that's going to change our tone from bullish to bearish. But right now, we're not there. We are above that support line. Now, what else do you have going on in this chart? Your MACD is already above its signal line, traveling north. Slow stochastics above its signal line, traveling north. Bullish and bullish. So we have all these bullish things going. The only thing that we don't know now, we are traveling north. how far are we going to go before we stop out and start to come down again? That's the only part of the equation we don't know. But since we don't know that part of the equation, we have to take what the market will give us. Right now, the market is giving us advancement. We need to be in a position to profit off of the market moving higher. That's what we are doing. Now we're going to look at the VIX volatility or fear index. We are currently between the low range and the ultra low range, bullish and bullish. So if we stay in this range, the market will go higher. The MACD below its signal line traveling south. Slow stochastics below its signal line traveling south. All of these things are bullish for the market. With this information from the VIX, there's not a large amount of fear in the market in the market right now. So we should be invested going long. Now I got a new chart here I want to share with you guys. New York Advance and Declining Issues, NYSE, the New York Stock Exchange. So basically this is focused around the S&P 500, but it encompasses all of the New York Stock Exchange, more than 500 stocks, okay? Now, so we've got a few different lines here. Let's break it down. The advanced decline line, the whole reason for this chart is the line that is in red and black. That's the advanced decline line. The green line that you see here and here, those are called Bollinger Bands. And they kind of make a low point and a high point that the advanced decline line can bounce in and around. Now on the blue, I threw in here the S&P 500 just so we could kind of see what it is doing in relation to the advanced declines. Now, if you look at the advanced decline line, the red and black line here, we sank down like a sinking ship, like the Titanic, and then we bounced up, but not by much, came down, but we did make a higher low. Came up, but we really didn't surpass that high right there, made a lower low, and now we are shooting up above it. So this part here, that's like indecision. And the market was in a little bit of turmoil during that time frame. You can see the trading on the S&P 500. It also was acting chaotically, up, down, up, down. But now we are starting, at least on the advanced decline line, we are breaking out above the old high, the recent highs, not the all-time high, but the recent highs. Now the S&P 500 is advancing, and it did make a higher high in relation to this one, but not this one over here. So it really, the S&P 500 really has to break out to make two new highs before we start, getting into clear blue skies. We're not there yet. Another thing that we have going on here, MACD above its signal line traveling north, slow stochastics above its signal line already north. So it looks like the advanced decline issues are moving forward, are moving higher, which is bullish for the S&P 500. All right, now we're going to look at TNX, 10-year U.S. Treasury yields. The 10-year, very important. The market is going to move according to what the 10-year is doing. Now, the 10-year, that's the candlestick chart, okay? In blue, S&P 500. In black, ETF is TLT, 20-year bonds. And 20-year bonds move in the exact opposite direction of the 10-year U.S. Treasury yields. Now, the yields had reached a high here, somewhere around, let's call it 48. And now it's starting to travel south. Well, guess what's happening to TLT? TLT hit a bottom and it is traveling north. Okay, so we have that going on right now. There is some action that happened here that's going to make a sticking point for TLT. For TNX, for the 10-year yields. If the 10-year yields can drop down below this point right here to somewhere over here, well, then its next target is going to be right here. That's going to give it a nice further drop and a nice further increase for TLT. So, look at the MACD. MACD way up here high on the chart, below its signal line, traveling south. Slow stochastics traveling south. Energies for 10-year yields are traveling south. That means that TLT, which is also going to be beneficial for the stock market, are going to be traveling north. They have the energy to travel north. Will they travel north? Maybe, maybe not. But the energies will be there to help push them and elevate them up. So it can only help us if the 10-year yields begin to decline. So we want to keep an eye on this. The energies are there right now. So if it maintains this posture, it'll be good for us in the short term. All right, here is our friend, Mr. Warren Buffett, the Oracle of Omaha, best stock market trader of all times. And here is CNN Business Fear and Greed. We are currently at 38. 1 week ago, we were at 26. So we are changing from 26 to where we're at now. We're going from extreme fear over to neutral and then over to greed. We're not even in neutral territory yet. Plenty of room for this market to continue to move forward. It is moving higher. We are in a position to make money off of that movement. Now we are going to look at things on a seasonality basis. We are currently in the month of January 2025. There is only a 40% probability, going back using 5 years worth of data, that we are going to move higher this month. Where are we at for the month? For the month of January, we are up 1.96% for SPY. Well, if there's only a 40% probability of moving higher, that means there's a 60% probability of moving lower. So the odds favor between now and the end of the month, we're going to have a decline, a minimum decline of 1.97%. Does that mean we will absolutely decline 1.97% from here to January? No, it's only a 60% probability, but we're going with the odds. The odds currently favor not great. All right, now we are on the Thinkorswim platform. This is a 3-year weekly chart for the S&P 500 with standard deviations of +2, -2, +1, -1 in pink, the regression in dashed green. I've got some alerts down here. Now, I've got an all-time alert of 608. I think we're headed to 608. We're not that far away from 608. We're at 597 on the Thinkorswim platform, 597.58. We're very, very close to reaching 608. Once we get up there, I think that we're going to continue to travel north. I think we're actually going to surpass it ultimately. This is my thought. Will that happen? Maybe, maybe not. We'll see what happens. Let's look at this here. Down over here, you've got the MACD down here. It's still below its signal line, and it looks like it's traveling sideways. The slow stochastics is up here, and it is below its signal line, but it's changed its trajectory. Let's get rid of this. Let's switch over, and we're going to look at a 1-year daily. Change our cycle brackets to 1-year daily. Now, with this information, look what you got going on. You have a negative cycle, as I outlined earlier in the show. All right, we have a high. We got our cycle brackets I've got them drawn down here, and I think that they're pretty accurate based off of 2 cycles. This one, and this one here. So these are the majors. These are the minors. Looking at these cycles here, these 2 major cycles, that actually looks pretty consistent with what the market's doing, with 3 minors in between. Now, if we take that as what we're seeing now, then that would be the low there, and this would be the low here, and it looks like we're in the last minor cycle phase, and we need to come out to over here, and we're starting to travel north. So is this cycle going to, bring us down here? A little unclear, but we definitely want to keep our eyes out for that, just in case that comes to spook us. Now, I'm thinking that we're going to hit that 608, just like I shared with you a second ago. We're moving north. Once we get up here and we break above that, This is what's referred to as like clear blue skies territory, all-time new highs. Now, let's assume the market does go into that territory. If it does, I drew in a trend line based off of this cycle high and this cycle high. That's this trend line right here. You see the trajectory. If we come up and we tag that line right there, you can bet your bottom dollar I'm going to be putting positions in place to protect this portfolio, because I do not think that we're going to continue to go higher than that high. That is where I'm going to start taking chips off the table, and I'm going to definitely be protecting my model portfolio. Okay, now we are looking at an Excel spreadsheet that I made up in an effort to determine the health of various asset classes as well as the 11 S&P 500 sectors. So, and the highest number you can get is the number 6. So anything with a 5 or a 6 gets the color green. The more green on the screen, the healthier or stronger this market is. Last week, there was only one asset class with green, and that was gold, GLD. That's the ETF symbol. And now you're starting to see more green on the screen. Last week, we were at 7. I mean, talk about rock bottom here on a percentage basis. Now we're at 20 for the various asset classes. The S&P 500 11 sectors, we were at 6. Now we're at 33, but we're still red. Still, extreme caution is at hand in this market. Even though I say the market's moving up, you want to do it cautiously. This market can flip on a dime, especially now. There's a lot of weakness out there, okay? I can see it. You can see it everywhere. So we need, first of all, we need to get rid of the red signal. We're close to doing that. We're at 33. We just got to get that number to 36. Once we go to 36, we go from red to yellow, which is more cautionary, but not a red signal, which is like, you know, things are falling apart here. The sky is falling type activity. So anyways, things are improving as of right now, since last week. Okay, we have a holiday coming up on Monday, January 20th. We have Martin Luther King Jr. Day. So the stock market will be closed for Monday. First trading that we can do will happen on Tuesday. All right, that's going to wrap up this video. As of January 18th, 2025, the market summation, according to me, Ken Cogliano, Senior Market Analyst for Conservative ETF Investor. This market is deteriorating as noted by the red signal on our strength signal gauge. We are getting the dead cat bounce. Dead cat bounce. You guys remember last week's video? Hey, I think we're going to get a dead cat bounce. Guess what we're getting right now? We're getting the dead cat bounce. Okay? And we should be long. Of course you should be long because the market's moving higher. The only question is it like a dead cat bounce? Is it just going to, where is it going to flutter and stop? I'm kind of leaning a little bit more bullish because I'm expecting us to surpass old highs and possibly make new highs. That may not happen. I'm prepared for any action that this market wants to throw at us. But right now, with the energies that I'm seeing, I'm giving the market the benefit of the doubt. I think it's going to move higher. I want to position myself to profit off of that movement, but I am prepared to pull the trigger and change my tone if things start heading sideways or negative real fast. The market is weak and we need to be watching closely so we don't get burned. Now, even though I say all these things, the market is an 800-pound gorilla. The 800-pound gorilla is going to do whatever it wants to do whenever it wants to do it. I've got a great quote for you from the all-time hero, Warren Buffett. Warren Buffett's rule number 1 for investing is never lose money. And then he often adds rule number 2, never forget rule number 1. I love it. I absolutely love this guy. Okay, now 2024, told you guys with our strategy, we smoked the S&P 500 by 14 percentage points. So we know we've got a sound system here. It's not a get-rich-quick scheme. This is for long-term investors. That's what this is all about. That's what this channel is about. Long-term investment strategy. Okay, you want to learn more about me? You want to sign up for real-time trade alerts? You can head over to this link. It will be down in the description down below. I hope you got some valuable information out of this video. If you have not done so already, I want you to smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.